He gave the S&P 500 a target in the end of 2021 of 4,300. He said that the stocks are going to have a great second half of 2021. Who am I talking about? I'm talking about the one and only Tom Lee, everybody. I'm not going to miss one little video clip of Tom Lee because when he talks, people listen. Everybody, here we are at the time of this recording. It is Friday, March 12th, the middle of March, almost the end of the first quarter, everybody. And Tom Lee basically, I have another video I did recently where in the beginning of the year, actually it was kind of end of 2020, beginning of 2021, Tom Lee said that he foresaw an S&P 500 figure of 4,300 by the end of 2021. A lot of folks were surprised by that forecast, but he did warn of a potential correction in early 2021 at some point between February and April, and we have certainly seen a correction, that is for sure. Anyway, I'm going to take you in right now, and Tom Lee is going to talk about the broader market. He is once again pretty bullish, but let's take a look and see what he has to say about the broader market. Here we are, Tom Lee.
Continue to talk about reopening. Let's continue to talk about cyclical stocks, reopen stocks, epicenter stocks, however you want to characterize them, with our featured guest today, who's now calling for an even bigger S&P breakout, maybe sooner than some people had expected. Tom Lee is the head of research at Fundstrat Global Advisors. Welcome back. It's good to see you on this Friday.
Yeah, great to see you, Scott.
Big headline from you today, man, is the breakout implies S&P 4,300 in the first half of this year. Tell us why.
Yeah, I mean, the S&P did something really important yesterday. It broke to a new high after a period of consolidation. One thing we have to keep in mind, if you look at the last two periods of consolidation and breakout, you had almost an immediate 10% rally. So that gets us to 4,300. But if we think about where the market is today compared to the start of the year, there's a lot of reasons to be more optimistic. You know, the path of the disease seems to be coming under control faster. And I think Biden's speech last night was really comforting to me. We've got brand new leadership coming through Epicenter. These are under-owned names, and they have the potential to rally another 50, 60%, which could fuel this S&P move. And more importantly, I do think that VIX is giving us a pretty decent signal. And finally, I think that, you know, the average American is ready to resume their analog life, you know, leave this digital life behind it. And that gives us a lot of surprise. And there's a huge relief package coming that's going to deliver a lot of money to make that happen. So I think that we should be pretty optimistic about markets.
All good points. And it's hard to disagree with you. And I think the move today in rates is directly related to what the president said last night about wanting all adults to be eligible by May 1st. Maybe that's sooner than some people had anticipated. So the reopen and the boom, if you will, could happen quicker than people thought, and thus rates are going to rise. But is that a problem if rates continue to rise and maybe even speed faster than some people are comfortable with?
Yeah, I mean, the bond market is, is important to watch. It's something we need to be afraid of. The level of rates today is actually still quite low, and I think even compared to a year ago, anything under 2% still looks pretty good. But you're right, the bond market, last week taught us, we have to be a little fearful of the bond market, but for now it's cooperating.
I mean, you don't seem to be fearful of it, though, if you think we've got 9% or so to go over the next 3 months.
Yes, and I think part of the reason is I think investors got really cautious the last couple of weeks. There is a lot of liquidity coming into the economy. Stocks aren't that expensive. I know people talk about PEs, but we have to keep in mind in 2011, people thought interest rates were at historic lows and they were silly, and rates rallied further. I think equity risk premia has a lot of room to fall, which means PEs can go up. But more importantly, I think earnings surprise could be tremendous. There's a lot of pent-up demand. Companies have already told us how much they cut cost. Even in 2008, on 10% lower revenues, the cyclical sectors had 20% higher earnings. That's in '08. In the last 12 months, companies have had a chance to reinvent themselves. I think we're going to be surprised by how much earnings are generated by the S&P.
Are you?
So there you go, Tom Lee. He's got some good info there. He talks, makes some very, very good points about what happened in 2008, and he talks about demand and pent up demand, and yeah, we got to watch out for those bond prices. I don't know about you all. I'm gonna certainly be trying to capitalize on the green days, and for me, I'm still trying to shed some of my Amazon. I shed it a little bit before the things got really red in the end of February, but I didn't shed as much as I wanted to. So hopefully I'll be able to shed some more Amazon, and then maybe I don't know. As of right now, I'm not really sure if I'm going to shed any Apple or not. But I really want to make the way for these younger companies. A lot of them I really like right now. Again, I really try to shoot for companies when they have recently or about to hit about $1 billion in sales, and or some other things too. Like I really like the high gross profit margins. I really watch for year-over-year revenue growth. One I really like right now, it's very interesting. And again, this is all for entertainment. Don't take any of this as financial advice. Is Snapchat? Snapchat. I mean, again, it's over 100 billion, so that's a little bit of a concern because it does limit your ROI when that opportunity is that high. But at the same time, they have forecasted that in a press release very recently that they're foreseeing 50% year-over-year revenue growth for many, many, many years. And they did, I think recently hit about 3 billion. Well, they're pretty close to about 3 billion in sales right now, and that's about the annual sales that I got into Netflix back in late 2011, and then into late 2012 when they're at about 3 billion in sales. And Netflix now is about 20 billion as of the end of 2020, and then they're forecasting 25 billion for 2021. So there's Tom Lee. There is what he has to say. What I'm going to do, everybody, I did a video recently with Tom Lee when he spoke in the end of 2020 and the early 2021 about the S&P 500 forecast, where he does claim that 4,300 level. I'm going to go ahead and link that video so you can check it out, and you can kind of see about the broader markets and what you think about that. But let me know what stocks you like right now. Put it in the comments below. If you like this, give me a like. If you like some of this value, I'm going to make sure to never miss an interview with Tom Lee and put it up as soon as I can get it. And if you have any questions, let me know. Everybody, I'm going to put a link below. I've come out with the blueprint. My blueprint covers investing, of course, online income. I've also been a digital marketer for many, many years. I've got 20 million in career revenue under my belt. I cover credit, business credit, financial independence, and I have got a guide in the end of the blueprint. It's a 15-page guide. All of the groups in the U.S. that give you free credit score, plus all the groups that give you a free FICO score and the corresponding bureau with that. One from Experian, TransUnion, and Equifax, so you never have to pay for a FICO again, and it's only $7, everybody. And if you have any questions, just let me know. You can email me, john@quicksupply.com, or just send me a DM in here and ask me a question. And I'm going to be doing more videos on online income, generating income online. I'm doing more, investing and then some credit. But in the future, I'm going to do some more, videos about generating income online because I do have a lot of experience with that as well. Anyway, have a great weekend.